this session. Uh, Today we are going to look at sale. This is the quarterly chart of sale. This is a long period of consolidation where price was not able to go up and break this level. So this level is already consumed. So if you can see, the price was registering here for a very long period of time. Again, price came to this bottom, which is the lowest part of this base candle, and from there it is now going up. If we see on the quarterly basis, this is one of the drop or base area which is currently price has reacted from. And for 2 quarters price was stepping down. What we can also see here is that the selling pressure is not too significant. For 1 quarter it was able to come around 25% of the base. For the another quarter it was slightly below that, so it is almost around 50% of it. But there is not a significant downfall here. Maybe because it is touching the weak portion of it from the supply zone. Once the price comes to the body part, we may see more momentum here. Now coming to the monthly chart, what we can see here is that this is the structure which got broken. So if I need to draw a line here, this is one of the area which had multiple touch point and price was not able to break it. But in this month of April 21, price was able to go up, created a shooting star kind of a structure. If you consider all these three candles, they are bullish, and then this candle nullifies 2 months impact, and now price started coming down. We don't have anything fresh here. This supply zone, which is a drop base drop, is now tested by this area, which is in the month of April 21. Another portion what we have, this is kind of a consolidation, then there is a big wick here, and it is also forming a supply zone kind of structure which is pushing the price here. Here is that because all these two candles are of the same size, we can consider both of them as a leg-in. Ideally, red candle is not considered as a leg-in, but if you see, if we eliminate this red candle, the complete move is from this level till this level, which is 76 and 55. So the red candle eventually gets eliminated. This came as part of the breakout because there was a break here of the level. It came as a retest and then it went up. Now what we are saying is that the current retest which is happening is of a great duration. So when similar distribution wise retest happens, we see price takes more time to go up. So what we can expect is that it will not be an immediate movement of price, which is going to be evident here. Now, let's look into the weekly chart. Same structure. We have this tested zone, which is a reaction from this area, which we just saw. And so this area is acting as a resistance. And we see this, there was a downfall movement, then there was a distribution upward, then it created kind of a channel. And this channel got broken here, which is in the month of December 20. And then from that point of time, price is going up. Now what we can see is that one interesting thing to look into is that traditionally this could be considered as a head and shoulder kind of a pattern. So this is the left shoulder, this is the head, and this is the right shoulder. So what we expect is that when the trend line breaks here, so price usually comes to this level, so which is equally move here. So this is something which we already worked on, and it was a successful. Now if you see on the similar line, what we have is that we are seeing kind of a flag pole kind of a pattern. This is the pole and this could be the flag. Knowing on the higher time frame that it is creating a flagpole kind of a structure, what we can expect is that price should be able to go up to the next supply zone as part of the flag structure. Now let me remove these line items. So now going to the daily chart, This is the same flag pattern what we discussed. Now, if we look into the price action, recent price action, now we understand that this area is still fresh, but it is not so great because it has lot of exciting candle, but too many base candles. So the price was struggling to go up, and sellers were struggling to push the price down. So if you see this green candle, price was one point of time here, but it found buyer, went up, and then seller were able to push the price down. This is something what we are seeing what is happening here. So here, this candle, if you see, it is a significant move here, where the single candle was uh, closed as a bearish candle. So it is actually Marubozu. So Marubozu candles are something which do not have a significant top or significant bottom. So it is called shaped head and bottom candle. So when you see similar kind of candle, they indicate a strong buy selling pressure. So price opened gap up, reacted from the supply zone, and then throughout the entire day it came down. Now let's see what is the current scenario of the structure. Price was coming down. If you see, there are not many green candles here. In fact, none of them are green. And then price found a buyer here. Like if you see this portion, which is around this area, 99, this is one of the smallest sub demand zone. So it has a rally, base, rally, 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 and continuation of it. So this is one of the area which worked as a turning point for the price. So we mark this area something like this. See, price reacted exactly from here, went up. Now after this area, we have only this portion which could stop the price. Now let us understand what we can do with this current price action. One thing we know that price is stepping down. It is making lower high, lower low, then lower high, lower low. In this point of time, it was higher high, higher low, equal high, lower low, lower high, lower low. But where is the low here? We don't have the low yet. So what price have started doing is that it has changed its momentum. So if I mark a line here, and if I also mark a line here, what we can see is that there's a triangle kind of a formation getting created. So if we extend this line, what we can see is that it is forming a triangle kind of structure. So this is a descending triangle. So what happens in descending triangle is that triangle is one of the pattern which is not too reliable. It can give a breakout upside and it can give a breakout to downside also. But the important thing what we have to look here is that this portion where the price reacted from it have broken this supply zone area. So if I need to mark this as a supply zone, finally price broke out with a gap, came down, but this area was able to give a close here. If I mark this also as a supply zone, this supply zone got violated. Now what we are seeing here is that this is one of the weak area which is acting as part of the demand zone, which is again a reaction of this demand zone area, which is rally, base, base, rally, rally, rally. And this is the candle what we can exclude because it is not a rally. It cannot be a rally because the price opened gapped up but closed below it. Now, if you discount this candle, so what we are expecting here is that price is getting respected by this weak area. This is not the first time. This is the second time where price has reacted. Now, if you see that both of the candles, both of these red candles, they are forming a kind of a exciting move. So it is a explosive candle, which is a downside. Ideally, what happens in this case is like if you have explosive candles, you should see the continuation of price. But there is something going on where price is able to find buyers. So this is one of the change of a trend in terms of how the price was reacting. Now, if you look into the structure here along with RSI indicator, let me plot the RSI. So this is the RSI indicator. If we draw a trend line on the RSI indicator, starting from this peak area till this area, what we can see here is that RSI is also going the same way as the price is going. The important factor what we need to consider here is that if I take this bottom two portion of RSI, which is here, what we can see is that this bottom portion, which is on 20th of September, where the RSI was also very low, which is 27.18. But in this bottom portion, which is on 30th of November, the RSI is at 28.89. So from 27 to 28, it is gradually increasing. And what we can also see here is that the, let me increase a bit, the low portion here, which is on 20th of December, which is higher than this portion of the previous high. So it is 41.37. So if the proportion, if you see, it is still high. And considering that we have a kind of a divergence here where the price is stepping down and RSI is going up, we should be expecting a good momentum out of this area. Now what we should be expecting here is that when we see a red exciting candle like this, then price halts and opens with a gap. So if I look into this, let's go into the 15-minute time frame and let's understand how the price acted on a lower time frame. So this was today's candle, 13th of January. Price closed at this level, which is 104. Price opened at 105, tried to come down up to 105.36, and then it continued to go up. This area is actually a gap because the closing was 104.99 and price opened at 105.92. So although it is not a very significant gap, but it indicates that there is a buying momentum here, like buyers are more interested. Now I'm coming back to the daily chart. What we can see here is that we see a contraction of price and price is trying to stay in the channel. But what we see that RSI is changing the momentum. It is trying to go up. It is becoming kind of a upward movement. And now considering what is happening at a lower time frame where price is trying to open with a gap up, which has already violated around 70% of the move, which is completely for this candle, and which has also eliminated around 50% of the move of these two exciting red candles. What we can expect is that we can expect a strong momentum in this script. Also, if we go to the weekly time frame, we know that it has created a flag kind of a pattern. And looking into this candle of weekly, what we can see is that it is trying to eliminate the up move. But on the other hand, it is also getting respected by this portion, which is a kind of a morning star pattern. So this is down, base, up. Considering this overall trend of it and expecting a flag level breakout, what we can do here is that we can go to daily. We can mark our entry above this candle and we can mark our stop loss with some buffer below this triangle trend line. So it is a 6 rupees stop loss, 6.35 rupees stop loss. And what we can target here is that our first target could be at 144.75, which we expect to be achieved with a momentum, because once we have a triangle break, we can expect price to get halted here, which is around 124 level. After price breaks this level, we should see a clean move up to this area. This is one of the supply zone which is almost tested, and it has a lot of base candle. So price may get reaction from here, but it may not revert till it reaches this point, 144. Once we have 144 level achievement, what we can do is that we can trail our stop loss on a daily candles low, or we can trail our stop loss at a swing low of each daily candle. For example, if I have my stop loss here at this bottom area, let me put a line here so it will be visible for you. So assume this was my trade. I had an entry here at this portion. This was my initial stop loss. Price went up and came down, created a swing here, and then went up. So what I will do is that I will move my stop loss from the previous bottom to the swing bottom here with some buffer. When price goes up again it comes down, and again it goes up, then I will move my stop loss to the recently created swing area. Then price if again comes back to the bottom area, I am still not stopped out, goes up, I am still keeping my stop loss intact till it breaks this level. I will not move my stop loss. Once it breaks this level, I will move my stop loss to the lower point, and that's how I will trail my stop loss. This is the way what we can plan to do the trailing of stop loss once we have good momentum. So we are expecting around 5.68 risk reward, but the moment you achieve 1.5%, you should move your entry cost to the cost. So your stop loss should be your entry price. That's way if the price trend to revert also, you will not lose out of capital. So this is the analysis for sale. Let me know your thought about this analysis, or in case you want us to review any other script, we'll try to take it up. Have a good day. Bye bye.